What's up? How's it going? I've been inactive, obviously, for the couple of months into the bear market, and the answer to why is no edge, essentially. And I'll show you through the sequencing of trades in January, where I didn't really do anything. I might skip to the actual results of when I started trading again in May, um, which is here. 8500. I'll just zoom in so everybody can see a bit easier on this. 8600, sorry. um, June 76,000, and currently in July made 42,000 yesterday and 24,000 on Thursday. So total equity climb here was 146,000 Australian dollars. The curve is quite smooth and not super volatile because I was taking profits throughout. But let me walk you through the current, I guess, analysis and perhaps how I've executed these trades. So we'll go straight to the charts, and I've always spoken about, quantifying your decision making and have an edge before you even enter a trade, and that's what I've decided to do this bear market, essentially. Where if I didn't believe there was a high likelihood of the trade occurring, then I wouldn't take it. And I'll use this as an example, best example here. Now I'll remove the drawings for the time being, but this is the entirety of the Bitcoin bear market currently. Now you can see this red line, it did ping at the start here, but there was no confirmation to me other than the fact that it's X amount of days prior to the next halving that was the top. Now as we start to fall here, what I'm looking for is a touch of this red line. So throughout this entire downward process, I had no reason to take any trades because I know in this scenario where this line is touched, I have a high likelihood that will be a short worth taking. And in previous bear markets, I'd use the 12 hour actually, where this touch allowed for substantial RR on your shorts. And if you were to take it from here, I would not take this false signal down here and have approximately a 10% stop loss. It's 100% strike rate, essentially. Same could be said here, touch here, straight down, touch here. 6%, with 10%, you would make that trade happen. And also here, but you would actually look at the line projected here, not the falling line. But if you just take it from here, it's still 10%, right? You can take it literally from the touch. So we have that, and it's just a projected rebound zone, which is a 0.618. Now I understand that this one in particular, I use the day, but it's pretty much the same line as the 12 hour here. It's just that the look back period of where these candles are being measured project this line downwards. So it's much easier to show you with the day time frame. So now that we have that, I can show you exactly how that's measured, which is like this, right? So I would see the indicator, and then I would measure it manually using my measuring tool. And I was in Hong Kong at the time here, and I mentioned it to some friends that, yeah, I'm gonna take my short here. First real trade of the entire bear market. You saw, like, in the previous months, I'd probably be losing maybe like just pretty much jabbing at the market for fun, 200 or whatever, $200. And now I started to get more aggressive, because I know that this is an edge trade that I can, pretty much make $150,000 over the course of a month and a half. So not a long time whatsoever. Now, how I took this trade was I literally used $1,000 in order to turn over the $140,000. And I think the reasoning behind that would be because I prefer taking I like to put the amount of collateral onto the account that I'm willing to lose, and I will use that risk. I will assign risk to all of that collateral. So my stop loss was like literally $1,000, and as the equity started building up on the way down, I started adding to my position. And how I added to this position was actually on the second time up. So I shorted around here, and then I waited for the price to come down, and I knew as soon, it was an opportunity for me to add to this position when it swept the 0618 again. And I added to this selling pressure on the way down, and just immediate stops above that, and it's continued to waterfall all the way down. Now, once it hit these lows here, that's when I took profits aggressively. And when you pretty much see that the market has structural support here on the side here, as well as extreme amounts of fear, you got to adjust your expectations, especially on how much that's going to capitulate. And also, if you've seen my previous videos on market bottoms and market tops through measurement, I've projected that this measured move for Bitcoin is potentially going to go between 55,000 and 47,000. I think I would be entering near that $50,000 range if it were to go down there around the October period. I'm assuming that it will. And also this wick as well sort of gives me an inkling that perhaps that needs to be filled at some point. But for the time being, I've also mapped out on this chart for everybody what typically occurs during, and I had this marked out as the top for this previous cycle, which was a little bit off, but close enough. But the duration, this was pre-mapped as well, prior to the price going down. So I estimated that that was top, and it was the top. But let's get to the point on where this low sits and how the timings have rhymed over the ages. Now you can see these green lines here and here and here. That's just 520 days prior to the halving. Now what we see in previous markets is that 520 days prior to the halving, approximately around that period is where those lows of the market cycle come in. And also from those lows, there's 360 days of bear market, right? So assuming, and that's how I marked this top of the market here before the price came up to that point. I marked it by getting the halving approximately 520 days and then 360 days prior to that. And now it's kind of like had a rhythm, right? If you look at the chart now, there's a rhythm to it through days and relationship with the halving. And obviously the market cycle itself, the bull market cycle being around 1065 days. Now, this coming cycle is going to be extremely interesting, and I'll show you exactly how I intend to play it. And I think it's worth mentioning as well that at these lows here, I'm going to go all over the place because it's going to be super difficult to keep track of. But what happened was, when I see those lows come in and close my Bitcoin longs, I'll cover myself for the remaining amount of I I had a short position and I started closing that position, and I will start covering and hedging against that with another coin. And what I saw a lot of strength in, and this is what you should be looking at, like overall market strength in different relevant sectors, in this case AI. So I'm looking at Near, Wild, and BitTensor, right? I'm still, adamant that perhaps BitTensor has a future in like BitTensor has something in its future, but I did end up longing BitTensor around these lows and literally shorting it at the 0.618 all the way down, and the beta play was also to short. Oh, I also longed Near around this period as well. I measured a 1.618. It lined up with those lows. Momentum was slowing down, stops below, and it expands the account quite aggressively. So you see how I'm taking the opposing pivot trade, and that's why there's a stacking effect from my equity instead of my equity doing this, right? Now that the price goes down here, I start aiming at the rebound zone, right? So I enter longs at the lows, and the funny thing is these might look different, but they're doing the exact same thing. They're going to the 0.618, right? And the funny thing is that I don't even take profit at the 0.618. I start taking profit like here, 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 and completely out even before it hits the 0.618. And once it kind of gets to this region, that's when I start taking my shorts. It's hard for me to think about flipping a position whilst being in the position. So I like to lock in my profits first and then assess the situation at the 0.618 and apply my new positions aiming at the lows. And how I thought about this near short that I took, and same principle as the BTC short here at this rebound zone, just so you have memory of that area. So now I've edge on both moves, right? I've also established that at a retest, I'm going to add to the position. So what's happened here? I've taken the short here. I've made a lot of buffer by taking this long, so I can put that stop. I put that stop quite high, right? Because I didn't think that it would press up that far, and if it did, then I could consider re-entering closer to 0.786. But in this circumstance, I just added to the position aggressively, and I aimed at taking this low once more. Now, did I take profit exactly at these lows? No, I took profit around here, and I wanted to see how the price progressed. The same thing with Wild, which I took a short on as well at the same time. This is the same time as the RZ of Near, and there isn't a clear RZ here, right? But what we look for is behavior that this coin might have, and obviously this is in a massive downtrend structure. Now we look to the left side of the chart and we understand that there's a lot of resistance occurring across this market, right? With Bitcoin at that RZ for Near, it's hit a supply zone as well as a lot of buyers and sellers at this area. So there's a lot of action and people looking to offload potentially some Bitcoin here, as well as confluence with rebound zones. And now there's additional confluence of what I see on the left side, which is historical resistance zones. Let me draw it out here. Right? And yeah, it peaked up over the top, but as soon as it turned over, I've mentioned, right side of the V in order to start initiating trades. And I would short this down only to this point here, not all the way down here, because I saw a lot of action here. And typically when you see extremely fast sell-offs or buys into the middle of these types of ranges, that's when reversals tend to happen. Example here, and then the price goes down into the center of this, and then it goes in the opposite direction. And this can be the case here as well. There's a lot of action going on here, supply here, sorry. Price goes up to that supply and then it reverses. So taking profit has been one of the most instrumental things here. And I also added to this position on here, and you just allow it to occur over like the course of a week, essentially. So you take these trades once and you don't think about it anymore. You set your stop losses and you allow it to happen. So it's not like you're trading every single day. I wasn't trading every single day. I just let it happen. I'm a busy man. I have up 2-3 businesses that I need to think about. So now to our current trade that we're in. Very easy trade to take as well. And I'll tell you guys what happens next. I know this is an overdue update, but a massive range rebound zone. Sorry, not rebound zone, golden pocket at the bottom here. I ended up entering this trade here. Let's have a look. You've got your Pepe. Got decent amount of size at the lows there, and now we have our stop losses. I can put it right on the break-even mark. I don't think it's going back down there. If it does, then it does. I don't really mind. That was taken yesterday, and it's up like 16,000 US dollars. It was up like 20 something thousand this afternoon, and same with NIR at the moment as well. I entered at those lows, and I've got the stop in profit, and I'm looking for it to run this rebound zone in the center, similar to how it did it up here. And why I expect it potentially to occur is this is a very significant level, right? I'm going to be taking this this long for Pepe to around this golden pocket region, right? This rebound zone region. Sorry, I haven't made one of these videos in so long. I've forgotten all my terminology, but that rebound zone is the 0618, 065. Now, am I going to take it exactly to that zone? No. And as you can see here, there's actually a rejection at this supply region here, and it could actually come back all the way down. Not sure, don't care. And I think that's the most important thing as well, is that like I've locked in my profits previously. This is just additional things that I'm adding onto my buffer for the start of the bull market cycle, hopefully near the end of this year, right? So now we see that the price is already kicking up here. Volatility can occur. That's the thing. You don't know what's going to happen once you start to enter these trades. But I know that that is a hard as support there. Major golden pocket for Pepe. And now I think I will start to sell around this supply region. There's just a lot of price action here that's based off. And it perhaps will just go in between the 0.5 and the 0618 and then sweep back down and retest these lows. And also what I'm thinking for Bitcoin is that it comes through and it tests this red line here at the $72,000 region, right? So it sort of aligns with everything that we've discussed before about extreme fear. And I don't want to use a fractal to kind of like go over this, but I will anyways. Extreme fear and breaking you know, hard supports to the left hand side generally doesn't happen. It's sort of like, it looks like it's gonna dump, but sellers are exhausted essentially because we're at all-time high regions, a lot of supply here. We need to kind of have like I think a move back into the mid-range and then a rapid push down, and there's probably going to be some crazy as news and it goes down to 50, maybe it goes even lower. I'll be keeping an eye on it once it kind of gets there, but you can kind of see it occur here as well. We sort of have a climb and we have a decline into these lows, and it doesn't quite go below these lows until closer to the expected low prior, like 520 days prior to the halving. And it does go up to the 0618 here again before pushing back down. So I will be taking a 0618 short, hopefully. I don't know, you guys will know once it kind of gets there. If it does, then I'm absolutely going to be taking it. For this short in particular, I'm going to size in quite heavily because I know, especially if it's not 520 days prior to the halving just yet and it's approaching that, I know it's probably going to be an extremely aggressive move down, likely, right? And it will be like a 10% as per usual stop, as per the back test, right? And I'll ride this down to that $50,000 region, and I'll show you that trade once it happens. But essentially what's going to occur, I enter this trade, it moves down, maybe it flicks back up into the level, I add to the trade, and then I squeeze this stop loss down, and it will start to push down much more aggressively, and then I'll push the stop loss all the way into a break even. But if it does go to this rebound zone, you bet your Pepe will go to its range's rebound zone also. And what are we expecting from that? It's pretty decent size profit for Pepe. I just clicked on the TP. It's around 55,000 US dollars. So I don't know, $90,000 or something Australian. And for near hitting the RZ, it's like $50,000 Australian or $30,000 USD. I mean, all these trades end up like adding up in different ways, and I don't really keep track exactly on like, oh, like this is going to make me this much, that is going to make me that much. It's more of a, I'm going to enter these trades with adequate amount of risk and have tight stop losses because I know how to enter very sharp on my trades. As you can see, like I'll enter on the confirmations, like over here there's like a head and shoulders pattern. I started to enter as it confirmed all the way up. I had stops below there, and then it started to progress to the upside. Now, how are we going to play after the fact? And I mentioned that there could be a low, and I'm sorry if this is a long video for some of you, but for those who are interested, I think that this is going to be a very interesting bull market, and it could be a short-lived one. I could be wrong, but I'm definitely going to be risking off at a certain period of time. Now, let's say, for example, it does this, it goes to that rebound zone, and then it sharply falls into this wick fill, and then that's where the bottom of the market ends up, and then we start to progress, right? I'm going to try to put a long in here, a large one, and maybe the stops are at 45,000 or something once there's confirmation, and going all the way up to this supply region here, which is the entire ranges 0618, right? So that's the trade that I'll be taking on the macro level, and might be the only trade I take unless I see bounces, which we will, by the way. I see bounces on this green line here. excuse me, I've also got a long indicator as well. So as you can see, when the bull market starts right here, the 5 hour indicator gives some tasty upside. So if you were to, like, with pinpoint accuracy, right? So if you are stopping out like 2%, there's potential upside of like 40-50% on like decent amounts of leverage. That's like a few $100,000, no problem, right? So I'll be taking my main, imagine this is the new bull market, right? I'll be taking my main trade to the RZ. So let's say, for example, and use the non-log, if I'm not mistaken. Yep. So the RZ is here. And I remember taking a short here on Bitcoin, a very big one, right? So that is the trade that's being taken, the main trade. Now the supplementary trades will be on the 5 hour indicator. And you can have edge cases across, you know, a one entire year period that you can long. So 1, 2, 3 stopped out, 4, and you're going to get stopped out in this as well. Maybe there's a better chart for this. I remember I used a specific chart. I haven't looked at this in a very, very long time. Is it 4? I actually haven't been looking at my charts in ages, so I don't know the exact tickers that I previously used to kind of get the oh, here it is. This is the one. Bitstamp. For Bitstamp, I can really see the contact on the indicator, which gives perfect like entries for massive expansion. And you're only going to get 1, 2, 3 stop out, 4 trading opportunities, A+ trading opportunities across this region. But let's say we're only going to the RZ point of the major cycle this time, and I'll explain why. I know this is taking ages for me to get to, but in this cycle, I'm going to stop right here, and here's the reason. So after this trade, right, after this sick trade is done, I long here, and then it gets to the rebound zone in the middle here, right? It does a climb, it does this, it touches the indicator, I add to a position, or I start a new position on a new account with leverage, and then it hits here, and then it hits here, right? And then there's a high probability of a downturn, so you can take a A+ short here for the immediate downside. But why I think that this is going to be an interesting moment in Bitcoin's I guess bull market, because let's go to the S&P 500, and I have these yellow bars across the screen, and what they represent are Jewish Shemitah calendar years, right? And I've conveniently marked out bull market cycles in green, and the red are stagnation / recessionary periods. I want to hide some stuff like volume. It's a bit disorientating, and I'll use the monthly. Now, something worth noting, right, is that prior the Shemitah years generally occur, or weak times in the market generally occur around the Shemitah year. and there's deviations to, I guess, the former side, like prior to the Shemitah year starting, of when the market starts to dump. And it like for the 1930 Great Depression, it was around 450 days prior to the Shemitah year, or 500 days. I'll roughly give it 500 days before Shemitah. And this downturn in the market happened exactly on the Shemitah year. It did have a downturn prior to that. Let me remove this for a second. The dot-com bubble occurred, or dot-com bubble burst occurred around 150 days prior to the Shemitah year starting, and the GFC 60 days prior to the Shemitah year starting. Now, the similarity behind all of these occurrences of massive market downturns are that they coincide with Shemitah year's Black Monday, I believe, Black Monday, during the Shemitah year. And you can see that it went up during this period, but there's a high risk period for equities during Shemitah, is what I'm trying to say. And we're about that time in this cycle, and I've done the same thing for the stock market in its cyclical nature. This period's a little bit longer than the other two, but I found periods of the stagnation, and also the periods of upside as well, which is here actually. So we're actually further now, and I've marked out the next Shemitah, which is incorrect. The next Shemitah is September 2028, and we'll mark out 500 days prior approximately, and that's being very, very conservative because we're comparing it to what happened in the global depression, or the depression that occurred, I think it was in America. Now, my brain's not working properly because I'm on a rest day right now. But let me get back to the fucking point. Danger zone, right? Once we get to approximately May 2027, it's time to be on your fucking toes, right? Because that is 500 days prior to the Shemitah, which is when that happened to the markets. And anywhere beyond that point, we start to sweat a little bit, because this one is around 100, and actually, I could say that it was a bit, like, you could even say that it started here because it's when the peak started, right? I'm just measuring from when it really starts going down, but it does stagnate around 275 days, or 75 days, which is like around here. And when is it going to exactly occur? Oh, that's December 2027. When is it exactly going to occur, the downturn of the stock market? I don't know. Simple as that. But obviously we're in an AI bubble, and bubbles tend to go on further than people think that they're going to go. And I do remember specifically that I had those lines marked here, the green line. I'm measuring the wave here from the previous bear market. I had the 2.618 marked. Now, between now and the end of the cycle for the stock market, we might even see this climb aggressively towards 3.618 up here. I know that sounds crazy and it looks crazy, but it's not impossible. Crazier things have happened, right? And somewhere within this danger zone, if we start to continue to do some of this action, there might be a lot of downside, potentially. Maybe not that much, but we're sort of due for a equity and actually a global market correction. Australia's property market has already started to turn to the downside, and this will exacerbate that significantly due to, I guess, exposure that most people have to, you know, the stock market and other commodities, which also go down as well. Commodities usually do very, very well during these recessionary periods for equities, and I'm not going to go into that right now. But now that you understand why I think we're not going to get like new all-time highs absolutely immediately, is because of that Shemitah and the market's looking extremely overheated, and the valuations on Tesla, Tesla was it, or SpaceX, retarded. But it can still go up for another year, is what I'm saying. And for Bitcoin, it might look extremely boring, like this. So May is around the middle here. It might extend further and hit that midpoint, and then the markets actually start to fucking die. Maybe, I don't know. It could actually keep on going up, keep going down. But I want to take this long here, which is the next trade. So first trade here, market in a color. Oh man, where's the color? Oh, the color box is here. So my first trade for this new sort of bear to bull cycle is there. Took some longs here. Next short, maybe here. Long, maybe here. Supplementary trades along the way towards the RZ. So in the span of, let me measure this, 2 years, I may take 1, 2, 3, 4, 5 real solid trades and live my life in peace. Supplementary trades are just fun to take with like low risk, and it just pads up the account further, but they're not day trades. So hopefully that kind of explains my perception of the market. And to take the supplementary trades, if you guys are wondering, it's just intuition and experience and being able to see fractally like how this market has reacted in the past. Like this is a very easy example to base my Pepe structure off, right? I immediately see this structure down at the bottom left and it repeating throughout Pepe's history, right? So there's reactions to these golden pocket regions from these ranges, and you could consider those micro, which they're not technically micro, but they can also be scaled to macro, right? Because that shape here is literally this shape here. Let me upscale it. Now you sort of understand the movements of a market the more you're exposed to it, and I've been exposed to crypto for a very, very long time. So if you see here, it's very, very similar in nature, right? And I'm only looking to take this to that level here of resistance, not all the way up, right? Because I've edge here. Beyond that point, I don't know what's going to happen, and I believe that the market has more downside to occur. So yeah, that's sort of it. And I do this without even thinking. I just see it, take it, move on with my life. Hopefully that's helpful, guys. And I will catch you in the next one. Peace.